Welcome to another analysis video. We'll talk about HDFC Bank, which is an Indian bank, because it came as a request from Dipankar Bandari. And if you are interested in the analysis of a certain stock, let me know in the comment section below. As usual, I want you to remember that this video is not financial advice and for entertainment purposes only. So to perform this analysis, I went over the annual report for the past 6 years, collected the information that I needed, and saved it here to create this report that we will go over. And the financial statements in the annual reports for this bank are stated in the Indian rupees and in the US dollar, so I didn't have to go over the headache of exchange rates for each year. HDFC Bank has one equity security, symbol HDB, and is listed in the New York Stock Exchange. The company ends its fiscal year on March 31st of every year. The auditing accounting firm, KPMG, which is a giant American accounting firm, did not find any issues with the financial statements, so we can use them to forecast 2023 numbers. HDFC Bank is an Indian private bank and has three principal business activities. Retail banking, which is the service provided to individuals, made about 71.5% of the 2022 revenue. And the wholesale banking, which is the commercial services provided to institutional clients, made 27%. And finally, the treasury operations, which managed the bank balance sheet and made about 1.5% of 2022 revenue. Scrolling to the revenue and expenses graph, the revenue has been growing in an amazing way since 2017, and the margins are crazy, which is the distance between the revenue in blue line and the interest expense in the orange line. The closer they are, the lower the margins, and the further they are, the higher the margins. So the margins range from 71% to 79% with an average of 75%. Scrolling down to the free cash flow graph, you can see it's a bit confusing because it's hard to find consistency to forecast the 2023 free cash flow. Definitely the free cash flow is positive and generally is growing when drawing a straight line from 2017 to 2022, but in 2021 and 2022 the free cash flow is declining. I don't think we need to go over the debt because the structure of the banking industry is based on borrowing from the central banks and lending it to an additional interest. And because the gross margins, which is the difference between the revenue and the interest expense, as we can see in the revenue graph, are about 70%, so they definitely can afford their borrowing very easily. Moving on to the outstanding shares, on average, HDFC Bank issues about 0.5% of the outstanding shares every year. And this big jump in the outstanding shares is the result of 2-to-1 stock split. So in 2019, there was almost 100% increase in the outstanding shares. Scrolling down, this bank is a dividend company, and in 2022, they distributed 19 cents per share for the shares listed in the New York Exchange market, making the dividend yield 0.3%. I need to mention that the shares listed in the New York Exchange market are called ADS or American Depository Shares, and each ADS share equals the rights of 3 shares, as we can see here in the annual report in this paragraph. So we should take this into consideration when finding the free cash flow per share. Now, let's forecast 2023 numbers. I'm using the revenue to assets ratio or the return on assets to forecast the revenue. And this ratio is declining steadily every couple of years, which makes sense because the bank is growing very fast. So to be conservative, I'm assuming it will be 7.15% in 2023, which is a bit lower than 2022. This will give us about $22.4 billion in revenue. Assuming the free cash flow to revenue ratio is 25%, the total free cash flow is about $5.6 billion. I increased the 2022 outstanding shares by 0.5%, as you can see in the formula here, because the bank issue on average about 0.5% of the outstanding shares every year. Using 5% discount rate and 5% return on investment ratio, the intrinsic value of the stock is about $57, which make the stock overvalued by 10%. Please let me know what you think in the comment section below. and subscribe to the channel to motivate me to make more analysis videos. Thank you and see you in another video.